Hi, it's Martin McGrath from Financial Edge Group, and today I want to answer a question I've seen a little bit over the last few weeks is, with all these things going on in the world, can I still retire in 2020? My answer is yes, definitely. Even though there's uncertainty in the world, there's things happening in the stock market, there might be things happening with your jobs or careers. If your plan was to retire this year, as long as you've got things in order and in place, there's no reason that they should be disrupted and changed just because of what's going on. I often say that retirement is a journey and not a destination. So hopefully this retirement plan you've been working towards has been in the plans for a few years. Hopefully you've been doing some things like adding extra into super, reducing and eliminating debt, saving on tax, and doing a whole bunch of stuff you can do in those last few years towards retirement. If you don't know what I'm talking about, jump onto our YouTube channel. There's plenty of videos I've got talking about those different things that you should consider. If you've been doing those things, hopefully that plan is on track. Now, one of the big questions I go, well, that's all fine, but my super balance is down. I've lost some money in my super. Does that mean I shouldn't retire? And the answer to that is no, you should be able to still retire. It really depends on how your super fund's set up. Hopefully you've been helping some help or advice on that. Ideally, that's diversified. So you might have some cash and fixed interest. You also have some shares and some property. And without a doubt, the allocation you've got in shares or property will be down. The markets are down, so therefore they're down temporarily. But ideally, when you retire, what you want your super fund to be set up is that even though your overall balance might be down, the cash and the fixed interest part shouldn't have been reduced. The other part is reduced. What we want to do when we retire is we want to leave off this cash and fixed interest part. Hopefully you've got a number of years there that you can rely on for the next few years to fund your retirement from that side of your portfolio. What that means is you're not selling the shares, the investments, the overseas shares when they're at a low value. That means you can continue to hold them, and when the market recovers, because it's not a question of if, but when the market recovers, you'll still be holding those investments. That's the key element to this is you can retire as long as your super fund is set up appropriately. Ideally, this would have been set up a few years ago, but even if you're here today and you're not sure, it's something that we can look at and potentially address and get set up now. So we separate that super into a couple of different buckets, a couple of different parts of portfolio. You've got your defensive assets that shouldn't have gone down in value, and that's the part you want to tap into first. You've got your growth assets that even though they might be down 10% or 20%, as long as we don't sell them, they'll have the chance to recover. So yes is the answer. You should still retire. If you want to retire, that's exactly what you should be doing. Just make sure that that's set up the right way. I don't want this to derail people's lives. People are planning for retirement for a long period of time, so I want to make sure you can enjoy that. If you want or need some help around that, hopefully that helps. If you need some guidance to get that done in your particular situation, reach out, let's have a chat, and we can figure out what we need to do to get that done. But looking forward to your retirement.